Good morning, everyone. It's your boy Vlad. Just sit up for a little bit. Just want to make sure everything is up before I actually start it. Alright, looks like I am up. Alright. So just wanted to go live for the markets or whatever. So, a couple of tickers that I'm looking at. The biggest one this morning was AVCO. And let me show you what I'm talking about. This is AVCO. As you can see, and this is some of the stuff that I look for on a day-to-day basis. I look for stock that is really volatile, the ones that's able to move, go anywhere from $3 to $13 in a few days. Those are the type of stock that I look to play. And I get a question a lot from different people asking me, what stock am I into? What am I looking at? What stock that I'm currently buying? But the thing is, on a day-to-day basis, I could play any different stock. I don't hold them long. I'm not a long-term investor. I'm a short-term. So I would buy a stock today and sell it in the next couple of hours. So I'm what they call a day trader. So in the stock market, there's different type of strategies. There's long-term investing. That's almost like the safest or conservative route. For what I do, is considered risky because I'm not in the trade more than, typically more than just a few hours. In the stock market, couple of misconception about it. People only think that you can make money in the stock market when it's going up. So you hear people, say, "Oh, it's a bad market," so you shouldn't be trading and all this and that. But you can make it both ways, while it's going up and while it's going down. And that's called shorting, or you're betting against the stock that is going to go to a lower price. One of the main strategies that I do is focus on shorting, betting against the stock, because a lot of these stocks, they're predictable in the way that they move. Right here, the screen that you're looking at, this is actually my paper trading account. I do trade with my real account in the background, but I have my positions for my small account. It is a lot smaller than this. So back to AVCO. AVCO, the reason why this popped up on my radar this morning was because it's gapping up. And what a gap up is, so if you're looking at this green candle right here, if I can zoom in on it. Okay, this green candle right here, the bottom part of the wick right here is where it opened. Then the shaded in part on top here is where it closed. So on Friday it opened, and you could even see it like right around here too. The O stands for open. So open at $4, and the C stands for close, and it closed at $4.23. And that long whisker is how high it got from that day. And you can see the H up here. It's gonna pop up right here, H. So it got as high as $6.14. So for a stock like that, that is considered to be volatile, because most stocks, they don't move that fast on the day-to-day basis. if you look at big companies like Apple, Facebook, you know, since they're really huge, they may move maybe like $2 or $3, you know. But stocks that's like between $15 to $1, they tend to move about 20 cents. Now this, you know, that stock there on Friday, it moved from $4 all the way to $6.14. So that's a $2 over $2 move. So that's almost actually over 50%. So if the stock is up 50% on the day, that tend to be considered it is volatile, and a lot of people stay away from it. And the reason why they stay away from it is because they don't understand the movement of how these penny stocks work. So I had this on my watch list actually since Friday once it did that move. Then this morning it popped up on my radar again. It is considered to be gapping up. So as you could see here, between Friday and today, there's like a big gap in here. Like it just jumped. And when it comes to red candles, it's like the inverse. So the open part of it is the top, and the bottom part of it is where it closed. So on this day, it opened at $10.18, and it closed roughly around $4.70. So once I saw that this was gapping up this morning, and this is the stock that I played, I immediately knew to go against it, because one thing about human psychology is everyone who was buying it on this day thinking this is going to go all the way to the moon, they're pretty much stuck. You know, as soon as the stock dropped, they're holding on to their shares. So once they're holding on to their shares, I was able to find various parts of the chart where I knew a lot of people were going to be selling. For example, right here, I knew that there people was going to be selling, because on this particular day, this is where it topped out at. So the stock dropped, and you had some people buying, then it stopped again, then it continued to fade. So on today, once I saw that it started going towards that area right here, I knew that was going to be the place where it was going to reverse. The stock market, you know, patterns tend to repeat itself. So it tend to repeat like over and over and over again. So you do have a high probability of something that happened in the past to happen in the future. Most so-called, you know, big firms or say, well, past performance is not indicative of future, you know, return. It's true in most cases, but when it comes to pattern for the stock market, they tend to happen over and over again, and that's why I say the predictability comes to come to play. So as soon as I saw it here, it stopped off. I was able to go short. So I was betting against it that it was going to go down. So I was able to bet against it around $7.07. And it had a quick morning push all the way up to that same level. Then it stopped out again. So it started fading down. Then it got as low as $5 and let's see here, $5.75. I was able to go in short at at $7.07, and I was able to cover it at $5.85. So that was a big profit there for me. And again, the concept behind this is to explain another way. It's almost like, let's say you and your friend had a phone, and you ask your friend, can you borrow the phone? So once you borrow the phone from your friend, well, not borrow, well, let's say your friend said that they wanted to sell you their phone at $3. Just giving numbers there, $3. And before you bought the phone from them, you was able to find somebody else that was able to you was able to get the. I'm losing my train of thought here. I'm looking at the markets. All right, so you was able to get the phone from your friends at $3, and you found somebody else that was willing to pay the phone for $2. So what you would do is pretty much buy the phone for the $2. You buy it for $2 and just keep the difference there. I know I'm explaining it kind of wrong there. I'm trying to think of a better analogy. So I actually, I'm gonna go back to the analogy of AVCO, but CRON, it spiked huge, as you could see here, and this is my paper trading account. For this stock today, $7,800, and I'll just tell you my thought behind it. This was considered a breakout. And if you don't know what a breakout is, you could reference some of my other videos on, I think it's titled How to Grow a Small Account. And it talks about breakouts and how you play those. But a quick overview with this is, let me show you how it looks on a 20-day chart. So right here was the highest that the stock have gotten. So I was able to play this, like this point right here. This is the highest that it ever got. And like I said, you can reference my other videos to be able to see what a breakout is. And so this is the highest point that it got. Once I saw that it passed that highest point, I knew that there was going to be a pullback. So I waited for the pullback, and actually I didn't wait for the pullback. I did. I waited for the pullback. Pullback happened here, but I was buying it right in between. I'm buying it right in between here. So it was at 1684. That was my position. It dipped down, so I was actually gonna play it, risking off of this level here. So breakouts, they tend, not to happen right away. So once I saw this, it dipped. Then it started perking back up. And I held, and I sold around like 1724. Like I had my sell order already to execute there. So with breakouts, that's another predictable pattern too, because this is the 1 year chart on the bottom. 1 year. So it broke out. Had actually two different breakouts. It broke out the other day here, but it was on the red candle. Then today is actually like the quote unquote official breakout. Excuse me. Excuse me. And if anyone have any questions too, gladly answer your questions. Whew, it's cold outside. Next one that I'm short at is BIOC. Same thing with ooh, excuse me. Same thing with this stock as well. All these days it went from 88 cents, 93 cents, all the way up to $2.99. Had a day down. So this stock could really move as well. So it's considered volatile. With this stock, I'm also betting against it. I'm currently with my paper account as well as my real account. I am shorting this. Look at the 20-day. Most level here, resistance is right around here. So I'd like it to either spike really fast in here, all right, back to the analogy here. I think I got a better analogy of what a short is. So let's say we're going back to your friend again. Let's say your friend have a phone, and the phone is worth $10, and let's say you borrowed that phone from them. So you borrowed the phone from them, and you immediately, once you borrow the phone from them, you immediately sell their phone for $10. All right, you was able to find somebody to pay $10 for the phone. So your goal now is to give the phone back to your friend. You know, same exact phone, identical. You know, can't tell the difference. None of that. So your goal is to find someone who is selling the phone for a lower price. So you're going to use that same $10 that you got, and you're going to buy it. Go buy an identical phone for a lower price. So you'll buy a phone for maybe $8. You get the $8, get the phone. Now you pocket the difference of $2. So that's the same way with the short. When you short or betting against the stock, and that's you're betting that it's gonna go down. When you bet that it's gonna go down, you're borrowing the shares from your broker. So and you're selling it. Like right now, if I borrow some shares from it and I sell it at $6.18, let's say I did 100 shares at $6.18. My goal is to rebuy it back once it's lower. So once it's lower, you're able to pocket the difference. But if you go higher, then you're losing money. So that's the easiest way people could understand short selling or betting against the stock, Hope that makes sense. So BIOC has few levels of resistance here. The 230, 39, 33s. That's a huge area. And you have over here in the threes. Those are huge areas of resistance. So far today, 8 million shares. Normally 18, 21. So it has a massive overhead. So the likelihood of it going past these levels is really slim. Only due to the fact that on this day, 18 million shares was traded. I mean, that's a lot. The day before, 21 million shares was traded. So combine those two together, you're looking at a lot of shares that this stock would have to fight through, because all these people that was buying in here and the stock dropped, a lot of them, they're still holding on to their shares. So anytime that is going to get close here, what they're going to tend to do, I mean, human psychology is like, oh man, I've been down, now I can see break even, let me sell. So it's going to be like the overhead to keep the stock down. So any spike around this area, and this is how I plan it to be able to get my short, 15, like right around here, and around here. Yeah, right around here, even at $3 mark. Like I would look to, go in short because of the volume. So hopefully, we see a spike. And oh yeah, and another thing too, earnings season is here. So normally with earnings season, you tend to see really good results in stock. So hopefully we have a good earnings season. So I'm gonna cut this video short, guys. Still a lot of time left in the stock market. It's only, it's about to be 11. So hopefully we could see AVIO do a spike. We'll get into the $9 mark. But yeah, this is Vlad signing off. Hope you guys enjoy the rest of your morning, and definitely safe tradings.